Hello, and welcome to another of our CapRight Expert Insight podcasts. This time, we're delighted to welcome Nina Owen, who's the lead of our hotel practice. Welcome, Nina.
Thank you, Steve. It's good to be with you.
It's good to have you. I was very interested to read your mid-year hotel REIT update. And I've got a few questions, and hope you're going to be able to give us a sort of summary. You've obviously spent many years tracking the hotel market, and so we're lucky to have you being able to compare trends. But can you summarize the sort of overall health check of the hotel sector as at mid-year 2024?
Sure. In terms of the hotel REITs, the first half of the year was very much preparing for the action from the Federal Reserve. The REITs were focused on selling underperforming assets and then using the proceeds to pay down debt, to increase liquidity, and to buy back shares.
Okay, and I noticed you gave us positives and negatives, the positives being strong annualized returns. And what I noticed most positive was that you project 3 or 4 years of RevPAR growth. So could you just confirm that, but also tell us about some of the headwinds that the sector is facing?
Sure. So the first half of the year, the occupancy was down more than most forecasters expected. So going into the second half, the main forecasters, so STR, LARC, HVS, are looking for stronger returns, but for the year, we're probably talking about 1.8 to 2% RevPAR growth. And that being slight decline in occupancy, but a stronger return in ADR. Now, on the supply side, there's very little supply that is broken ground and coming online. So that should help support occupancy in 25 and 26. Then if you look at Morningstar, inflation for the U.S. is projected to be about 2.4 for 24. So the RevPAR is slightly below that. However, if you go out a little further, STR is projecting 2.4% growth in 25 and 3.2% in 26, whereas the inflation in the U.S. drops to about 1.8. So it is longer term looking positive.
Yeah, good. I need to mention that I was surprised to see New York City, Oahu, and Las Vegas as the top three not transaction markets, but performance markets. Now, finally, the outlook, the mid to longer term outlook, it seems to me like quite an attractive sector. But what are your comments about the future?
I think it is an attractive sector. I mean, specifically for the hotel REITs, they have an advantage that they have is access to equity. And as the transaction volume picks up, the brokers report there are lots of deals that are ready to go. It's just a matter of the owners deciding when they're going to market these assets. The REITs will be able to buy, to pick and choose from, possibly the trophy assets, but also possibly assets in urban core areas.
Well, good. Thanks for these insights. When we talk again, I hope the reemergence of the sector as an investment target will be something that we can track very positively. So thanks for being here, Nina.
Absolutely.